askslim.
Hi, I'm Steve Miller. Call me Slim. And this is the askslim Market Week. It's a look back what happened in the last week and a look forward at what might happen in the next. And this week, well, we can't say that a lot went on. Of course, it is a holiday week, and happy Thanksgiving to all. Really, overnight was most of the action, with not much happening during the regular trading sessions here in the U.S. SPX, the S&P 500, was in a very tight range as we expected. You'll see as we look at our short-term week, we pretty much caught the high and low on the week, missed by a couple of points. Just kind of sneaking up, though, during the week was the Russell, moving up pretty strongly, and transports towards the end of the week getting a pretty good lift also. So some things moving up a little bit stronger than we see in the broad market, but overall we'll call it a fairly quiet week. Treasury market, it was stronger than would be expected in a week that saw the stock market holding in pretty nicely. The dollar continued to be strong, and gold makes a new 52-week low, as does silver, and also actually getting down to lows that we haven't seen since 2010. Crude oil, well, that's near its lows and hovering above the recent lows and not all that far from the lows we saw in 2009. And copper, or you might call it Dr. Copper, seeing the lows since 2009 in that market, as it really speaks a sad case for the world economies and world growth when there is no demand for copper, and copper, iron ore, pretty much all of the material sector continues to see a lot of significant weakness. So not a lot going on, and probably don't have as much to say in this show as we do in a lot of the other shows, but still you're going to love our short-term view of the coming week. Let's take a look at our 60-minute chart of the S&P 500, the future ES, and we'll see what happened during this week. So here is that chart. And this is 60 minutes. The gray area is the area that is the overnight trading, and the white area is the area that is the trading during the day. So Monday you could see kind of soft markets overnight, but got a pop right over here. You could see that bar there. That's when the Saudis said they'll do whatever it takes to stabilize the oil market. So oil got a pop, and then of course, oil stocks in Europe, they got a pop, and the markets moved back upward. They tried to rally but then slipped, you can see, on Monday. That was a day when Dr. Copper was down, well, for its 14th straight day. Really amazing. Tuesday, world markets drop on the news that Turkey shoots down a Russian warplane. You could see that bar right there overnight when that news came out. NATO called an emergency meeting, and Putin called Turkey accomplices to terrorists. Imagine that. So the ES drops 20 points overnight, but then recovers. Home prices come out strong, and the GDP revised up above that 1.5% that was expected. You could see on Tuesday the markets moved strongly up during the entire session after that wobbly opening that it had right here. Another example, just like we saw on that horror of the Paris attacks on that day, where the stock market can't come down and buyers are using any weakness to come in and buy the market. On Wednesday, well, world markets were kind of firm. They didn't do a whole lot in there. Consumer spending and sentiments came out a little bit weaker. That lifted the bond market, which was really already firm for the week. Our U.S. stock market on the pre-holiday Thanksgiving day just moved absolutely nowhere, sideways. Well, Thanksgiving, the markets are closed, but of course the overnight markets trade, and you could see it was strong in there. But this little abbreviated session in here for the futures didn't do a whole lot. We come in on Friday, the Eurozone flat, but China has a huge down day as China widens their probe on brokerage houses. They're really cracking down in there, and word is that they're not going to really support this their equity market. Material stocks turned really weak, but airlines are having a strong day, so airlines are moving up. In fact, the Dow Jones Transports are the best index of the day right now on Friday, up about 0.8%. a nice up move in there, but you could see in here, here's that decline that comes out as that China news comes out about their widening that probe, and China has its worst day we've seen in quite a while. So that is a look at what happened in the last week. Next thing we're going to look at is the calendar of earnings and economic news for the next week, and jam-packed because we didn't have a whole lot in the last week. As far as economic news goes, there is just about nothing as far as earnings goes, as we're now officially outside of the earnings season. Here is our economic calendar for the coming week, and you will see in here, well, not much in the way of earnings reports. Wednesday morning, American Eagle Outfitter, and we have Synopsys on a Wednesday after the close, and DG Dollar General Metatronics on Thursday right there, as you can see, before the opening there. Lots of news all week long. We could get little moves in here, especially in bond markets on PMI and ISM. And those could be market movers. The ADP right over here, which is the private sector employment report, that could be a market mover, as the beige book right there. And then, of course, when we get to Friday, anytime you have the ADP on Wednesday, you then have the big employment numbers coming out on Friday. And remember, we have the Fed saying that they are data dependent, and those employment numbers are going to be meaningful. I think you could pretty much count on a rate increase when the meeting comes in December, and I think the markets pretty much are expecting that anyway. That's probably why we see a firm bond market. But overall, I'm thinking that the firm bond market, firm stock market, all of that together with the firm dollar is all really money moving into the U.S. Because of geopolitical concerns. So the U.S. is a flight to safety going on. That's probably why we're seeing these markets all firm together, which is an unusual situation. That probably means that they kind of go down together when that happens, as money starts flowing out of the U.S. Not saying when that's happening, but I think it's going to be evident when that does hit. That is it for the opening segment for today. We'll be right back with the best of the week. All right, best of the week. Quiet week, but still we had some movers in here. Interesting. The best movers were the stocks that were so beaten up in the retail category. In fact, one of them was on my list of best stocks for the year. That's Abercrombie, ANF, and that had a giant move in the last 2 weeks. This week alone, in these last 5 days, that includes actually Friday, because we had a 1 day less this week. 35% up in the last 5 trading sessions, ANF. It's all about them getting it right, where for so long they got it wrong, and stock gets a big boost. Sadly, still down for the year, even though I had it on my best for the year, and it's had this enormous move. It really wrecked itself earlier in the year, but now coming back, and really not a bad pattern in there. Take a look here at the weekly chart in ANF. For those of you that are new viewers, I do cyclical analysis. I measure market cycles, which is essentially movement of money inside and out, and there's repeating phases. And right in here, you could see we were expecting a low to come, as we saw that period of nested lows right in there, and expected a rally, and man, that came in a sharp way. So ANF makes a major bottom. The fact that it got above this level here at 2360 is a very bullish case. As a matter of fact, you can see the formation in here of the inverted head and shoulders bottom, which is really classic. Right across here, you could see the neckline right there, and the breakout, really a kind of a small little shoulder in here, but sometimes that happens when it's ready to fly on the upside. So good pattern in there in ANF, and I would say I would rank this as one of the better retail stocks out there. Lululemon, LULU, that's up 13% 50% of the week, and this cycle turned up also. Now, this one is not anywhere near as clear as a bullish as we saw in Abercrombie, as this one in here gets up to not even that 50% retracement in there. We're going to kind of look for this kind of action in here. As it fails in that resistance zone, has a little bit more room in there, but good week in there for Lululemon, and their earnings come out on December 9th, so you're going to want to keep your eye on that. Now, one of the stocks that we talked about in the last few weeks that we thought was ready for a good size up move, mentioned it, and it was a counter trend trade, and that was Dollar Tree. We thought it was ready to have a good move on the upside, and man did it ever. Let's take a look here as we look at Dollar Tree, DLTR. That, remember, in the group is also Dollar General, DG. They bought out FDO, and so it made just two of the dollar stores that we followed. And, a couple of decent traders in here, but man, talk about pegging a bottom in here based on cycle patterns. We really did that. Even the patterns in here on the candlesticks were super. Let's take a little closer look in here, and you can see what we were looking at. We expected a low right in here at this point, and then a rally. You can see how nicely that came, and here you could see these two dojis in there that made this morning star, double star morning star, tested the bottom with a W bottom, and then has a monstrous move for 2 weeks on the upside, this week gaining 11% and looking I would say really nice. Take a look, a couple more retailers, because they're really the features to look at in here this week. Here is Coach, and you can see in here Coach at a point where it should be making a bottom, and that looks like it's doing so also. When you see these two blue spikes, that's pointing down to the range of time that we were expecting a bottom to occur based on these cycle patterns, and we would expected it to have gotten a little lower in there than it did, but looking like a nice looking pattern and turning up right on time. So I would say that Coach looks to me like it's better, but not great. This 34-week moving average is significant as that last high area. So yeah, the stock could pop into the 33s, 34, but I don't expect to see a lot more than that, but has a nice gain in here on the week. Best Buy also gets a decent gain on the week, but this is a stock that is in trouble. Why is it in trouble? Well, I want you to see there are two patterns in here, a bigger one that's right in here, and then a smaller one, two small patterns in there, and you can see the clarity in rally, sell-off, rally and sell-off, rally and sell-off, rally and a sell-off. That is, of course, not a good pattern at all, because this came down already and tested this low with all this time to go. I'm willing to bet you that this is trading under 28, and this becomes a red zone in here on our charts. And those of you, if you're not a chart subscriber, you can get our charts on TOS on your platform if you wish. So that is a look at these really good stocks in that had good moves in the retail sector. Number of the other ones did really well. Gap Stores jumped up about 9%. GPS, I think that one's a sell and getting up close to a sell zone. And AEO, which is going to report earnings in here, I think that in the area of 16.5, 17, that one is also a sell. I don't like either of those patterns. Also on the upside, Solar City gets a big bounce in there, and I think that that one might have a little more room, but overall negative cycle configuration. In other words, intermediate patterns suggest more on the downside after this rally. CRE up 16% on the week, and that's at resistance with a negative pattern also on the intermediate patterns, and that is what I think are some of the worst. One more to mention though, Citrix, CTXS, that stock up 9% on the week, and that stock I think is a sell very soon. I think it's going down through January. So those are stocks that moved up, and even including what I think are some of the worst patterns. And that is the best of the week, and we'll be right back with the worst of the week. The worst of the week was pretty much made up of material stocks as pressure continues on the commodity markets, even in this quiet week. We've seen copper, iron ore, just tremendous pressure there. Of course, oil, gold, silver, platinum, copper, all of them really just having tons of pressure, and that has affected the material stocks. First one we're going to look at is U.S. Steel. Man, this one has just absolutely been annihilated, and even in a pattern that we expected to have a decent rally in here at some point a couple of months ago, it could barely even tick up. You could see this right in here gave you absolutely nothing. Right now this is in this another one of these big red zones that doesn't really end until sometime in January. So we're really looking at patterns in here that are quite negative. Take a look at BHP Billiton, and you'll see a similar story in here. This one points to late January before that low is due. So a really bad patterns that we're looking at in here. That does not speak to good economic growth. Rio Tinto trades a lot like BHP Billiton. RIO, that was down 6% on the week. BHP down 8% on the week. And these are some pretty negative stocks. Also in this category, Vale, VALE, AK Steel, AKS, Allegheny, ATI, and Fairchild, FCX, all down 7%. So you can see a lot of pressure there in this material sector. Just continues to be really horrible. One stock I want to look at that is not in the material sector that to me is giving a lot of negative signs, and that is Regeneron. Now, pretty hard to trade a stock that's up close to about $600, but this is in that category of the biotechs, and a pretty good driver in the Russell also when you look at this sector, this portion of the biotech sector. So here is that chart on Regeneron. Now let's talk about what I don't like in here. We're going to look at the weekly and the daily chart, as this one down about 4.5% on the week, so not all that much on the week, but this is an evening star. You can see that pattern right here as it made this move in here, which is the IBB pattern. So it makes its low right where IBB does and then gets a rally. Now the two cycles come in nesting together over here. You have another evening star that forms right over here. It fails up at the high area. Now it's still above these moving averages, which isn't bad, but you can see here on the daily chart that a lot of selling been coming in this area of like around 590. Here you have an engulfing pattern and a big shooting star way back here in August. Here you have an evening star on this daily chart right there, and now it comes up and makes this M top. Man, if it breaks underneath here, that is likely to be a bad sign. So a move under 544 probably gets you the distance from this double top right there, which is, let's say, 592. What's about 48 points, so that takes you down under 500 based on the measurement right where it got some support right over here. So this Regeneron not only down 4.5 points for the week, but 4.5% for the week, but a pattern that really is looking stinky. And you also have to think about Hillary Clinton all over this sector here, really wanting to knock down their pricing ability. SNPS is the next one we're going to look at, or the last one in this category of worst of the week. And here is the daily chart. Now I want you to see this was last week where it had this big gap right there, and then has come up in what I believe is a bear flag right there, coming up and testing these moving averages. It was in positive momentum for a long period of time. So those of you that use my slim ribbons are aware that right over here it gave a positive momentum signal, and you can see that big move on the positive momentum as it moves up there from 48 to 53, and then we see this big kicker pattern, this big downside gap on huge volume, and now moves back up into this area right here. It's a bear wedge or a bear flag, whatever you want to call it, and I think the odds are very high that that stock is going to move to the downside. We're going to put up the weekly pattern for you to look at, and you'll see right in here it's been a strong stock and it's getting a move up. So this pattern right in here, you can see right in here, beautiful. It's now in this rally right here, And my question is, how long will it hold? Days or maybe a few weeks? After that, I think it rolls over and has a big hit out here into February. So big double top, a lot of signs in SNPS that it's going to move to the downside. That down 4% on the week, and I think it's a sell, SNPS. That is it for our worst of the week.
Hi, I'm Epiphany, your Ask Slim spokesperson. Here's important news you can use. With the Ask Slim memberships, you can raise your probability of success as a trader or self-directed investor. Be better prepared for the coming week and make informed decisions when you watch our weekly show, the Ask Slim Market Week. Archives to the show and more are in Level 1. In our videos in Level 2, get help with trades for all styles of market participation. Better understand 6 sectors of the futures markets, learn technical tools, manage the impact of your emotions, and apply analysis of stock sectors in the big picture of the major markets, and you'll have access to our ever-growing video library. Level 3 is our trader support. Call it Coaching Light. Ask Slim for personalized help by email on the technical, strategic, and psychological aspects of trading. Or go all in with Slim's charts right on your TOS platform. Level 4 gets weekly updates with annotated charts on over 300 widely followed stocks, futures, indexes, and ETFs. Slim's unique cycle charts add the dimension of timing to help you improve your own analysis and strategic approach to the markets. Learn more and choose the membership that works best for you at www.askslim.com/membership.
All right, here's our short-term view of the coming week. And this week, well, probably going to be a lot busier in the coming week than it was in the last week. This holiday week that we've been in has not seen a lot of movement, and that's pretty much what we expected. That made it a really easy week as far as what I was talking about this week, because I looked for some narrow ranges, almost got the S&P 500 perfect, and the rest of the market's pretty much in line. We're going to give ourselves a rare 85 to 90% in this last week, but again, not a lot happened, so it was one of the easier weeks. Let's take a look at what we're looking at in each of these 5 markets plus the VIX as we take a peek at what happened last week and what we expect might happen in the coming week. So we're going to look only at daily charts because we're looking at a short-term view, and we're going to start with the chart in light crude. And there you could see in there our short-term view for all of our subscribers. You will see that they have there's a little bit of changes in here as we had a little bit of shifting, but basically the cycles look pretty much in line as we expected. We expected a test of this minor resistance, which it was able to do on Monday, but then failed. It tried really all week long and then rolled over. You could see this formation in here, and that's really what we're looking for, right? So in the coming week, we think we're going to be really stuck in a range. We have this big downside trend going on right here. We have cycles that are, well, looking like they're going to bottom after a couple days, try to get a rally in here. So we're really looking for this range of roughly in the area of 40.5 to 43, which is like right in this area right here. This is probably the range we're going to be stuck in, and then some sort of another downside capitulation as we move out over here. So we're looking for narrow range outside of any geopolitical happenings that might cause big moves. We would say that pretty much looking for this kind of action, a little more down, then a little attempted rally in here, and stuck in that range, and maybe not very big change in the next week. Next thing we're going to look at is the gold market /GC. We expected that would come up and test some resistance, but we said small change or big down because of the way this pattern is set up, and that is pretty much what we got. It was a small change until it became a big down. You can see right there, and we're in a pretty risky time. We're going to look for this time period right in here in mid-December to be some important area. That's that gray box that you see in there as the area of nested lows, and we think that we're going to get some choppy downside action in here. For those of you that want to know where those big supports are on the way down, we did a gold big picture analysis that will be available on Tuesday, December 1st. So you'll see that come out for members, and join up. It's not very expensive, and you will see our big picture in the gold market. And right in here, we're looking for this next week to be choppy down and potentially big down, with a lot of downside pressure right in this period. So we're just going to look for this kind of action in here, with a potential rough week or 2 or 3 out there for the gold market. Next market we're going to look at in here is the euro currency /6E. Euro currency tends to trade a lot like gold these days, and you can see in here the short pattern. We expected this to be a narrow week in there, and with really a minor rebound at all if we were going to get anything. And you could see in here that we thought that 2 weeks from now would begin, from when we did this last week, would begin the next rally, and that's probably a bounce in here. So this is pretty much as expected. We're expecting an upside week in the next week, and then another dip, you can see in here. So we're going to call it an up week in here. Nothing significant, staying underneath the resistance areas, and just modest on the upside in there. That probably means, you know, that it's going to trade a little bit contrary to where gold is right now, or gold might get just a little bounce with this and then head lower again. But gold is in a ton of risk, and the euro currency still not bottomed in here, looking like we'll get a little attempt in there, but then turning on the downside again. We'll call it a small up week in there, but sets up more on the downside as we look for a dollar peak in a few weeks and a euro bottom at the same time. So that is a look at the euro. Let's take a look at the bond market. Now, this one we're only going to get like half credit for. We thought it would come up and test resistance early, and then there was risk it would move to the downside. So we actually did get that upside test of resistance. It's more into this higher resistance on the 30-year than it is on the 10-year. But it couldn't really go anywhere and didn't have the break yet that we expected. So we don't really get credit for that portion of the call, but we're getting to that right now. We're really going to call this to be entering into a down week. This pattern in here is reflective of the 30-year also. And this decline that we were looking for in here, well, that didn't really bring much, did it? So we're going to look for a little bit of an upside potential in here early, and that the S&P 500 pattern suggests if there's an inverse correlation still, not sure about that, this might get a little more of a move, and then turning down and into the following week, a lot of risk in here. So we're going to look for just a little attempted upside in here, but then there's risk of turning down and maybe even big down. I'll show you the S&P 500 in a second, and you'll see why that's contrary to what we're looking for, of maybe a little bit more upside in the bond market and then down. You would think if there's an inverse correlation, which we haven't seen during this holiday week, then what you'd see is a little more up in the bond market and then down, inverse to what we think is going to happen in the S&P 500. Let's take a look at what happened in the SPX. What we said in the last week was that we thought it would trade in a tight range, and that's really what we got. Man, our estimate was that it wouldn't get through around the 2100, and it would come down and test the area of around 2067. That was the range we called. Well, the high end here that we got right there on Monday was 2096, and the low that we got right over here on Tuesday was 2070. So we kind of missed it by 3 or 4 points on each side, and this very, very tight range that it's been in all week. Now, the way these cycle patterns set up in here, Let's just blow this out a little bit further so that you can see that since this low back over here, we've had these 16, 17-day cycle patterns that have been shaping up, as you can see right in here, 16 days, 16 days, 17 days, and this rally right in here going on, which is now about 9-10 days old, and that is suggestive of the fact that we're likely to turn over and have a decline in here in this next week. That's this right in here. But this is getting kind of late, and we would expect that the decline would come into that support zone. We're going to call it 2067 to 2058 is the area we would expect to test in the next week, and then have a move up of some significance to test this area again. So we had thought we would get a good message out of this rally. Well, the message we get only out of that is that, well, it's holding at this resistance, but the holiday week gave us no information at all. So we're just going to look for this pullback and the next rally and see how good that rally does. And then after that, we're going to get into a much risky period on the weekly pattern. So we learn a lot by the magnitude of each of the windows. This window here that's coming will tell us how much selling there is in the market. This window here that's coming will tell us how much buying there will be left in the market after that, and we'll just have to see how this sets up, and that's the range we're looking for, 2058 to 2067 in the S&P 500 in the next week. And that sets up what should be another rally period after that. So that is a look at the S&P 500. Last thing that we're going to look at in here is the VIX. My computer's a little frozen at the moment, so we're just going to pull that off until we unfreeze, and then put up this next picture of the VIX. And let's get this up here. And there is the VIX, just so that we can get a peek at that. And here's the pattern in here. And what we were looking for in the last week was kind of just sloppy sideways action and getting ready to turn up again. Well, you can see in here on these patterns, that's really what it looks like. So remember, what we're looking for is the stock market to have a down week. So inversely, this would have an up week. Then we're looking for the stock market to have another rally, so that would be this in here, and then we're looking for the stock market to pull down again and sharply, and that would be that in there. So you can see we're using the correlations of the other markets to help us in here, and we'll see how this works. So we're actually expecting for the next week the implied volatilities, the VIX, to get a move on the upside, and we'll see if that's all in alignment. VIX going up, stocks going down, and the bond market getting a little bit more of a pop, but then getting ready to roll over. That is it for this segment. That's it for Market Week. We're still in a holiday weekend. I hope you have a great weekend. A little note that the Market Week there will not be one next week because we are on vacation, and so 2 weeks from now will be the next Market Week, and we're looking forward to seeing you then. I hope you have a great trading week and a great holiday, and always wishing you great trading.
Well, I'm going to the city and I'm gonna do a steady show.